Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. Let's take a look at some charts on BTC and Eth. And really, this could be a 5-second video. I just show the correlation between the S&P E-mini, or ES as it's referred, and BTC. And here we are. We have been unable to break the essentially one-to-one correlation on low time frames. This is a 15-minute chart from the 4th of December to present, but we are not acting as an uncorrelated asset. Certainly, we are acting as risk on. We are acting as being highly sensitive to any interest rate hike. Any legacy, traditional finance, anything is 100% driving what's going on in the near term. And it doesn't make sense to ignore that so long as this continues. So certainly something to watch that I'm watching every day. When are we going to break this correlation? When are we going to move to the beat of our own drum? Now you can go in to this week saying Q1 was supposed to be bearish. Q1 looked bearish last week or whenever I did a video based on a bunch of metrics, and it doesn't look any better this week. But I would watch this closely for sure. So we get to the technicals for BTC. It doesn't look great, right? you can't look at this chart and think, man, this looks so bullish here, right? Now, depending on how long you want to be in Bitcoin or what's your time horizon, you know, if you're here for a scratch-off lottery ticket, get rich quick, this is not the coin for you. This market is not for you either. We've been in a range essentially for a year. We're still in that range. Okay, that's step one. We have MAs that people pay attention to, besides crypto people, called the 50 and the 200. Crossing bearish. This is known as a death cross, and we can argue about MAs versus EMAs. I don't care. You will see press about this, people talking about this. You will see also people saying that this is a lagging indicator, it doesn't matter. Fine, right? I don't care. But the point is, I can't be bullish when we get a death cross, okay? Death is bad. That's just how it works. So yeah, a death cross here didn't really go anywhere, but we weren't bullish until much later. Right after this death cross, if anything, you get a crisscross, whatever. That's something to look for down the road. But if we're talking in the here and the now, this does not look good. Now, I have tons of targets that are sub 30. Does that mean I think it's going to go there fast or at all? No. But we aren't in bullish mode. We aren't in let's look for targets above all-time high mode right now. That's just not the direction. So not only do you have a death cross, but you've got all sorts of chart pattern stuff that I'll get to in a minute that doesn't look great. You're losing a VPVR level. These are volume levels at price as opposed to per day. Not only has volume per day just been kind of sad in general since July. You know, it's like whoever was here in early 2021 and Q1, Q2 is just left after July, didn't come back. And that was a theme across the board for a lot of stuff. Not layer 2 stuff maybe, but for BTC, for ETH especially. We just never saw big volumes again. This is just Coinbase, but we need volume somewhere. We need somebody to get excited about something, the highs, the lows, whatever. We need capitulation. We need emotion. But back to VPVR, this is volume at price, and we broke this, they call it the point of control, just the highest volume area at 47. So in the range, 47 was the middle, basically. Now we have all of this support to the downside to contend with should we get there, but we also have resistance at 47 now based on VPVR. And oh, wouldn't you know, in the background here is the yearly pivots, and hey, there's one at 47 there. So if we can get above 47, I can start to get bullish again. That's one metric we can use. Are we above VPVR midline? Are we above a yearly pivot or around it, right? Bullish above 47, and very likely remains bearish below 47. There's a yearly pivot at 26, right? 26K would make a new multi-month low, new yearly low, and certainly would not look good. I'll get to that in a second on a chart pattern, but that isn't a place I want to go, but it's a support level should we get there based on the highs and lows of the previous year of 2021. So nothing on this chart looks bullish to me. The last thing that you can look for on charts with RSI is a bullish divergence. And what that means is a lower low in price and a higher low in RSI. I'll show this in a second as well, but we had a 2-month bull div. Okay, you see people calling all sorts of crazy stuff. You get 5 4-hour candles. It's a bull div, guys. It's a bull div. It's going to bounce. Well, it might, but your confidence level should match the time frame. So if we have a 2-month div, then you can start to say, yeah, maybe this thing has a shot at bouncing, right? Right now we don't even have a bull div, but that's something to watch for if we do get a lower low. If this, then that. So if we're above 47, bullish. If we cancel or nullify, invalidate this death cross, bullish, that would be above 50. If we get a bull div, then you can, for me at least, that's when I start to step in and say, okay, yeah, now maybe it's a good time to start buying again. But here it's in no man's land, and it's got that head and shoulders nastiness that I'll talk about. On the cloud, it is just so far away from bullishness here. Bullishness for the cloud is above 54. This is the daily doubled. I don't care what you use. This is what I use. And it is 13K below where the cloud says it's bullish. Now this will morph over time. It's dynamic support and resist as I see it. So it'll come down slowly as price is down here and potentially continues to move down. But cloud's telling you don't get bullish until this is above 54 on trend. Now this may bounce, right? This was bearish all of May, June, some of July, eventually bounced. But the mindset is not, hey, let's get bullish. We're down 40% from the highs in November. We can't go any lower. Not exactly. That's not exactly how it works. The momentum here is significantly bearish. It's undeniable. And depending on how you trade this, size, risk, leverage, whatever, blah, 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 you may be looking at this thinking, yeah, this looks great for me. I'm going to jump in here and trade whatever, right? Okay, fine. But on high time frames, this is not bullish, okay? You cannot deny that. Let's look at another system, Alligator Fractal. This is a set of 3 MAs that cross green, red, blue when we're bullish, blue, red, green when we're bearish, and we've been bearish since 58, 59 on Alligator Fractal. The fractals help you give entries and exits. So on the way down, any break of a bear fractal here is a short entry. So that's telling you any close below that level is a short entry. So you get all these short entries down here. You even got another short entry the other day. And the MAs are still bearish this whole time, okay? So if you're bullish, you want to wait for these to flip. These will flip rather quickly because they are low time frame MAs, but something else to watch for is where is the stop loss of the current active short or long, in this case a short. Based on the fractal, which is the last bullish fractal, it's 48K. So again, that level comes up 48, 50, 54. There's a lot of stuff up there, but I think 48 to 50 is good enough to satisfy most people for a potential bullish recovery. And you'll see people get super excited on a bounce. Let's say we bounce from 48 or 42 to 48 over the next week, right? Everyone's going to get mega bullish again. And the high likelihood is that's just going to chop a bunch of people up until we're above 50 significantly. Look at the pitchfork. It's also concerning that we are now out of the middle part, the middle portion, the meat of the pitchfork, the brown zone, as it's affectionately called. These are diagonal support resist levels based on the rate of change of 3 points if it fits historically. If there's backtesting to support a pitchfork like this, which I think there is, you're getting acknowledgement of these levels for price, you're getting bounces, whatever. You're getting a lot of congestion around the midline. That tells me, yeah, this thing is real. This says we're not on the bullish side of this thing until about 59, okay? So don't get too excited if we start crossing into 48, 50 territory. There are plenty of other levels on the way up that we could just chop around for 6 months, right? Now, it means we're unlikely to shoot to 22, which is the bottom of this thing. But there are a lot of levels sub 30, depending on what you want to watch. This is logarithmic growth curves from lookintobitcoin.com. 26K is the low here. These are curve fitted based on historic whatever. So yes, they look good. They're supposed to look good. And it gives you some idea of where support might be. So that's 26 on that. And you could make a spreadsheet and say, these are the levels. Check them once a week. Are we there? Are we not there? Whatever. And have some trading decisions from there. This is the 2-year MA multiplier. The bottom of this is at 30K, 28, somewhere down there. This has picked highs and lows rather well, including most recently, including Corona, including 2018, including 2015, right? And all of the all-time highs. So this says ignore Bitcoin completely as a buy until we're below the green zone. Okay, that's a pretty simple binary viewpoint. And it tells you all this stuff in between is just nonsense chop, basically. That's certainly one way to look at it. We look at the 200 MA and the 200 EMA. I'm just going down the list here. We're just going to shotgun everything, right? Because you're going to see certain people looking at certain things depending on what they believe in or trust or whatever. That's why I just like to look at it, everything. Why not? Here's the 200 MA in the green, which is the ultimate low, somewhere around 19. We've never breached that significantly for a significant period of time, I guess you should say, since existence, since this thing was on the map and we had enough data to show it. We never got lower than that. So if you want to be super ultra conservative, you're not buying Bitcoin until it's anywhere near this level of currently around 1920. The 200 EMA, the blue line, which we have held below for a significant period of time in 2019, is another level to watch. It's somewhere around 25, 24, somewhere down there. The good news is if we do significantly drop, there are plenty of places to support in the 20s and 30s, okay, depending on what you want to look at, depending on how it looks like when we get there. If we're talking about chart patterns, when you first pull up a chart, based on your knowledge of what's going on, you have some feelings one way or the other, right? You looked at this chart in June, July, and I'm thinking, a lot of people were thinking, yeah, this looks like a potential head and shoulders. You're looking at this chart from August to present, and you're thinking, yeah, this looks like a potential head and shoulders. And it's hard to shake that. And another reason not to be mega bullish when you see a reversal pattern, okay? Just as in June, the invalidation criteria is the same for this pattern, potentially, if it is a pattern, right? You can argue with me about volume and whatever, and it doesn't make sense, and it blah, blah, blah. I don't care. Okay, it's a head and shoulders, okay? It just is, right? It looks nasty. It looks gross. It doesn't look like anything I want to touch. On the long side, the invalidation criteria is the same in that anything above the right shoulder or whatever grossness this turns out to be, this is a much more convincing shoulder than whatever this was, but 51K is the level. So again, 48, 50, 51, 54. These are levels that we need to get back to, and then we can start talking about 72K plus again. Right now, the high likelihood is we just keep ranging and we are significantly more bearish than bullish. Here's that div again. I'm just going to show. We haven't even started a div, right? So this could take a long time to play out. It certainly did in June, July. Looked worse and worse and worse. Broke lows, broke multi-month lows, right? It looked real bad. And it looked like we definitely were headed sub 30. So yeah, we're down 40%. This looks terrible, but it could look terrible for a long time before we get an actionable trade to the long side, I think. And something else people are watching on the weekly, well, certainly, if you know nothing about this chart, nothing about Bitcoin, and you pull this up, what's your first instinct? Your first instinct is, this could be a double top. This could be an M for murder. I'm not going to touch this thing, right? And then you get less and less people jumping in and more people on the ask sell side, and eventually just becomes a self-fulfilling prophecy. Then we break 33, and again, you get some crazy targets, but this is not a bullish setup. This is not bullish price action. This will not give anyone confidence seeing this that, hey, this looks good. This looks like something to jump into. Just as bearish as this was, or is, this setup, which arguably was an inverted head and shoulders or whatever, had a bullish vibe to it, right? This Adam and Eve ascending triangle had a bullish vibe to it. So for people who know nothing about crypto, I'm talking about the people with the money, the institutional people, they're looking at this thinking, yeah, I'm not going to touch this, right? The momentum's dead. It's flat. It's ranging. It's unexciting. No thanks. I'll wait. I'll sit this out. That's my guess anyway. Moving to some other on-chain stuff, MVRV is market cap versus realized cap. I like it better than NVT. I think it's been more accurate than NVT. This as well is in the middle of the road, telling you virtually nothing. It is at 1.27. Historically, anything above 6 has been a sell zone, as in overbought. Anything below 0 has been time to buy zone, and we are a long ways away from that still. So this says we could significantly either drop in price or increase in on-chain activity relative to market cap before anything actionable happens. Based on what on-chain activity looks like, my guess is this would need a significant drop in price in order to fulfill this level at 0, right? Again, you can backtest this. It's all here. Just pause the video, look at it if you've never seen this before, but odds are you know exactly what I'm going to say here, in that, we're not in the buy zone yet. So I wouldn't get too excited. I like to buy when we're bullish, and I like to buy when there's blood in the streets, absolute despair, devastation. Again, we're down 40% from the top, but the metrics do not tell you, yeah, everybody got slaughtered. We're not there yet. We're not in the depths of a bear market, which is where you're going to see an MVRV below 0, other than special events like the COVID 2020 candle, but that is a long ways down. Whoel multiple, how rich are the miners today versus the past year? Also middle of the road, tells you nothing actionable going on here. Does not tell you to buy, does not tell you to sell, tells you wait. There's, again, backtesting to support lows here. Just look at it. Look at the highs, look at the lows. Nothing actionable here whatsoever. Looking at on-chain activity for BTC, transaction counts continue to decline week over week. This is the 1 week average. But you can't get bullish on price when on-chain activity is trending bearish. You know, if technicals are already bearish and on-chain activity isn't helping you out, then it's hard to be bullish here. And we can massage this all we want. Look at the 30-day, right? It just looks worse. It doesn't get any better. You know, we need on-chain activity to start picking up again. And you might say, well, Lightning is sucking all on-chain activity that's small and insignificant. Yeah, I guess. I mean, again, you can massage this however you want, but this just isn't going to look bullish for you. Neither is active addresses, which continue to make lows since November. So when you say we're down 40% since November in price, and we haven't made a turnaround on on-chain activity since November, it kind of makes sense. Kind of lines up. It's weird how that works, right? So again, if you're looking at the MVRV, you would need a divergence in on-chain activity to market cap here in order for bullish sentiment to sort of return in that regard, because that's not bullish whatsoever. Hodl waves, I'll just talk about for a second. They are flat, again, unactionable, don't really tell you anything. These are really only useful at the highs in that 50 to 60% of the chain has moved in the past 6 months once we're at what ends up being an all-time high. Most recently, we got to 40% of the chain. So we didn't quite even get to that 50 to 60%. You might say over time, there's a diagonal trend line here. So that at the next high, we may not even see 40%. We may only see 30% of the chain moving. But something to pay attention to in the later months. It doesn't really help you in the lows. I guess you could maybe correlate, you know, certain lows in 6-month activity with lows in price, maybe. But I don't think that's super convincing just yet. Flipping gears to ETH, on-chain activity also not as bearish as BTC maybe, but transaction counts certainly down from November significantly, right? 1.4 million per day to around 1.2. Still ranging. That's on the weekly. We can massage it a little bit. Look at the monthly. It doesn't look any better, right? This is not bullish. It's not bullish. Active addresses, same story. Down since November. For any coin, you need some sort of on-chain activity for a sustainable trend, one way or the other, in general. Looking at ETH's 50 and the 200, this hasn't had a bear cross since May 2020. RSI hasn't been this low since March 2020. So we are still, in my opinion, in the reversal process from bullishness. All of the TA that's applied to BTC is certainly applicable here. You're looking for bull div, you're looking for chart pattern, you're looking for something. You know, there's not necessarily a head and shoulders here. There's not necessarily an M double top. None of that nastiness. But you can't ignore a death cross. That hasn't happened since May 2020, right? This is a massive trend that's telling you momentum is now shifted and or done on the bullish side of things, and it will need to range or recuperate before going again. Will 3K be the low? It might, right? But you're just flipping a coin from my perspective. This does not help you on the long side of things whatsoever. RSI helps you and tells you, yeah, there may be a bounce soon. But at this point, the death cross is probably inevitable, and it may just stay flat for 6 months, and it may go to 17K from there, right? I'm not saying it can't do that. It's just, what am I doing here? This looks less and less bullish as we go on. We are still in the range from 2021. You know, we saw this level in September, October. It's not the end of the world. We're still at the 50% level. There's still plenty of volume on VPVR, so it's not all doom and gloom. But it has been a nasty descent since November, especially in the past week. We've gotten far below the cloud now, and the cloud is telling you 3,800 is the level to watch for bullishness sometime in February if you want to put a timing component on it. This isn't irrecoverable from a messy cup and handle perspective either. You know, if you squint and you say maybe this is cup and handle, kind of like I have been for the past 6 months, then if this thing can break out to 42, I do like that 6 to 7K possibility, depending on how you want to measure this. But again, it's an if this, then that. You can't say we're going to hit 6 to 7 when we're at 3, and it looks like we're going to fall off the table back to 1800. You know, that's not how this works. You can have hopium and copium, but this does not look bullish as we sit here today. You know, the cloud is telling you definitely not. MA is telling you definitely not. Alligator Fractal telling you definitely not. This thing's crossed bearish. Stop loss again 3,800. No surprise that these levels are where they are. So yeah, you could long and you could be very right very quickly, right? This thing may bounce to 38 plus, but I don't see the TA evidence to support that at all. This is still bearish. It would need a cross, a bullish cross on these MAs to support being long again. Currently, that's definitely not the case. ETH BTC, gotta say, I was really hoping for that flippening narrative to kick up it just didn't get there, didn't quite get there. ETH BTC looking rather unhealthy over the past week as well. Still not over. This is still recoverable, much like the cup and handle mess. This ascending triangle, whatever you want to call this, Eve, Adam, W. You can't get a W at the top. Well, you can. Whatever you want to call it, it still looks okay. So long as you can hold this multi-week diagonal support. So I'm going to leave this chart for now on a back burner. It certainly could still play out in a very similar way to point one. And ETH's got proof of stake coming, so it's going to get all sorts of pumpamental crap like it did with the ultrasound narrative or ultrasound money narrative nonsense, right? Imagine if they weren't burning ETH the way they were. Imagine if ETH 2.0 wasn't locking up a bunch of ETH. How would ETH look then? And with all these things, why is ETH still so correlated to BTC? So we may see this pre-pumpamental shift when we go into proof of stake sometime this year, ideally. I think Vitalik said Q2 or something, 2022, but that probably means Q4 2022. Then lastly, something else I just picked up over the past week, I was flipping through some charts. This is the Tether price relative to $1 on Kraken. This is BTC price on the bottom here. Historically, there hasn't been a mega strong trend one way or the other if you're looking for correlations between USDT price. This is market rate, not redemption rate, the rate at which one person is willing to sell or buy to another person. So that market rate's in the red here. And typically since March, if this dips below 1, we're more bearish on price than bullish. Most bullish periods saw sustained Tether prices above $1. And we didn't see a dip below $1 on the 8-hour chart. Below $1 meaning below 0.9996. Okay, this is super zoomed in price-wise for Tether. But we hadn't seen that since the July low. So something to watch for over the next week, the next month is, do we have sustained Tether below $1? And there could be other outside influencing factors like news or Tether sentiment or whatever, right? But do we see sustained Tether below $1? Or is it a one and done situation? If it's a one and done situation, it is more than likely that this is potentially a reversal or bounce in sentiment, right? Just something to watch, not really tradable, but very interesting dynamic that I don't see too many people talking about. So that's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.